Administrative Arrangements Order Number 1 of 2015 was made by Governor and Council on 16 February 2015, following the state election in January this year. The key machinery of government changes, or MOG changes, made under this order were a redistribution of portfolio responsibilities across ministers, redistribution of public businesses between departments, and the renaming of some departments. Not all departments were impacted by these changes, and the scope of the changes was less significant than experienced in some recent restructures. Through this presentation, I would like to highlight the key areas to be considered and addressed by departments affected by the MOG changes. These represent the areas most likely to impact on the financial reporting processes adopted by these departments this year. The Queensland Audit Office has available on its website a checklist for managing machinery of government changes. This checklist provides guidance on some of the most common and important issues that arise in implementing MOG changes. As a starting point, it is important that departments clearly understand and agree on the nature and scope of the restructures required. That is, identifying and defining the areas that are being transferred under the Administrative Arrangements Order and what this involves. Once the scope of the changes has been agreed, the restructuring of the departments needs to be supported by a robust and well-planned process. This process requires an appropriate level of involvement and commitment from senior management of both the receiving and transferring departments. At the organisational level, departments will need to consider how the MOG changes impact on their existing governance and reporting structures. This includes identifying whether there is a need to realign accountabilities within the department. For example, how will the department report to relevant ministers on their performance where there is now more than one minister to which they are accountable? This, in fact, will need to be considered by all departments that are impacted by changes to ministerial portfolio responsibilities, and not just those that have been impacted by MOG changes. Departments will also need to review their financial management policies, practices, and systems to reflect changes arising from the restructure. One of the key challenges in this area is identifying where and how transactions for transferring operations will be processed during the transition period. This will require an assessment of whether the transferred operations can be accommodated within current systems at the receiving department, or whether interim arrangements will be required. If not appropriately addressed in a timely manner, this will have direct impact on the annual financial reporting process. Impacts on budget allocations, transfers of assets and liabilities, and financial reporting requirements should also be assessed. More detailed guidance in these areas is provided for in the QAO checklist. The Queensland State Archives have also available on their website guidance on how to deal with record-keeping issues in implementing MOG changes. For financial reporting purposes, it is important that departments impacted by MOG changes revise their financial reporting work plans to reflect any additional tasks or issues that need to be addressed as a result of the MOG changes. As no departments were abolished, there is no significant impact on the timing of departmental financial statements for 2014-15. Under Section 80 of the Financial Accountability Act 2009, these redistributions are taken to have occurred on the first day of the month following the redistribution, that is, 1 March 2015. In planning for this year's financial statements, there are three main areas that should be considered as potentially being impacted by the MOG changes. Under APG 9, Accounting for Contributions by Owners and Distributions to Owners, the transferor and recipient agencies must agree on the values of the assets and liabilities transferred or accept the value as determined by the owner, that is, Cabinet, the Cabinet Budget Review Committee, or the relevant portfolio ministers. This needs to occur as soon as practicable after the transfer has occurred. If it appears likely at any stage that agreement cannot be reached, steps should be taken to escalate the issue to the appropriate ministers for resolution. In prior years, issues in reaching agreement on transferred balances have resulted in unnecessary delays in the financial reports. It has also resulted in inconsistent information being disclosed in the financial statements of the receiving and transferring departments. Issues can also arise where receiving departments are unable to accommodate the processing of transactions associated with transferred functions. Where these transactions continue to be processed by the transferring department, the receiving department will need to consider how it will obtain the information required for financial reporting purposes. This includes how they intend to obtain assurance over the completeness and accuracy of the transaction and balances for financial reporting, and the audit evidence to be provided to QAO to support these amounts. Departments should also review their draft financial statements early to identify and update disclosures impacted or otherwise required as a result of the MOG changes. We'll now look at some of the specific areas of the financial report that may be impacted. The first area I wish to address is the valuation of non-current assets reported at fair value. While these assets are transferred at their existing book values, APG 18, Machinery of Government Changes, requires the transfer agency to assess their fair value prior to the transfer. APG 18 outlines what is considered appropriate in these circumstances. This assessment of fair value should be reflected in the value of the asset balances agreed under APG 9. While it would be reasonable to expect that the agreed fair value at the date of transfer also represents fair value at reporting date, the receiving department should perform their own assessment to identify whether there are any factors that may indicate a material movement in this fair value between the transfer and the reporting date. The assessment of fair value prior to transfer may be significant, as departments cannot transfer any existing asset revaluation surpluses related to those assets as part of the MOG change. If the receiving department subsequently needs to recognise a decline in the value of the assets, this may need to be recognised through profit or loss and not through asset revaluation surplus. The net value of assets and liabilities transferred needs to be adjusted against equity in the financial statements of both the transferring and receiving departments. This should be identified as a transaction with owners in the statement of changes in equity. It is important, however, that departments ensure that contributed equity is not reduced below zero. If total contributed equity is less than the value of the net assets transferred, the difference should be adjusted directly against the accumulated surplus or deficit and not recorded against contributed equity. The financial statements also need to reflect any changes to the major services provided by the departments as a result of the MOG changes. In particular, these changes need to be reflected in the description of major services as disclosed in the Summary of Significant Accounting Policies note, and the Statement of Comprehensive Income and Statement of Assets and Liabilities by major departmental services, commercialised business units, and shared service providers. In some instances, this may be straightforward, for example, where discrete areas are transferred. However, for other transfers, this may be more difficult and a practical approach may need to be adopted. APG 18 and AASB 1004 contributions require additional note disclosures for MOG changes. Both the transferring and receiving departments must disclose the value of assets and liabilities transferred in and out as part of the MOG change. In addition, the recipient department must also disclose in notes to the financial statements the revenues and expenses for the whole period for each activity or project transferred, the revenues and expenses accounted for by the transferor department prior to the transfer of the activity. This is an area departments will need to liaise closely on to ensure the information disclosed is accurate, complete, and consistent between departments. APG 18 also identifies a number of other areas in the financial report that may be impacted. It provides examples of some specific note disclosures required for MOG changes. Additional areas that may be impacted include reporting of budget information, key management personnel disclosures, cash flows, agency transactions, and investments in other entities. Given that it is now nearly a month after the MOG changes took effect, departments should be well progressed to implementing these changes. At the very least, departments should have agreed on, or be very close to agreeing on, what's being transferred. This includes agreement on the asset and liability balances to be recognised as at 1 March 2015. It is also imperative that there is a formal plan in place to ensure that MOG changes are implemented in an efficient, effective, and timely manner. Finally, departments should be reviewing their financial reporting plans for 2014-15. In doing so, it will be important that departments are working closely together to identify what information is required for financial reporting and how it is to be provided. It is also important to ensure that there is early engagement with the external auditors. While there is the potential for the MOG changes to impact a number of areas in the financial report, let's not forget the key message for today. Financial statements only need to disclose information that is significant and relevant to the users of the financial report. This should be the focus in assessing how the MOG changes need to be disclosed in the financial report. As previously mentioned, guidance on implementing MOG changes is available through the checklist prepared by QAO and Queensland State Archives. Departments should also ensure they are familiar with Queensland Treasury requirements as identified in the Financial Reporting Requirements and the Financial Accountability Handbook. The Public Service Commission also has available guidelines for the allocation of resources following a MOG change.